Welcome to Global Financial Engineering. I'm Dr. Glen Brown. In this week commentary, we start off with gold futures. We have seen a medium to long-term breakout on gold. However, to make this session more meaningful, since it's an educational video, I'm going to show you how you could construct a basic trading system to do these analysis. I will also attach our more advanced weekly commentary in PDF format so that you could have an idea how we trade these markets. Before we get over to the practical part of this session though, I would like to bring to your awareness the potential risk in this type of business. Instead of using a static risk warning, I want to use a dynamic one, which means that there is potential for changes, and when we have any additional information that we feel we should attach to the risk warning, then we'll put it on our website. So our website is www.globalfinancialengineering.com. Please note that we are a prop trading firm, but with a difference in the sense that we do not currently offer any service or product to the general public, and yes, we do not accept clients or external funds. However, we do have opinion on the various market that we trade. Since we are a global multi-asset class professional proprietary trading firm, we sometimes share some of our opinion with the general public. So in light of that, let me bring to your attention the risk disclaimer, and to find it, please just type in risk disclaimer on our website here. And when you do that, you will see a pop-up with different version of the risk disclaimer. Don't worry too much about the name. Anyone's supposed to have the same information, and we assume that you would have gone through this risk warning, understand all areas of it, and most importantly, understand that we are not giving you financial advice. I'm going to just break a minute and give you a little time to read through it. It's very important to read through. So I could pause the video, or I'll give you a little time period to read through this. Possibly consists of two sections. Let's put the first section here first, and then I scroll along to the final portion, and then we get over to the activity for the session. Okay, so we assume that you reached to the end of this. I'm going to scroll up to give you the final part of it. Have you look, it is pretty much detailed. I'll pause again and allow you to read through it. It's important for you to be aware of the risk involved. There are so many hype and false information in this industry, but still it's a beautiful industry. It's an industry that can empower you to be free, allow you to earn a decent living if you are willing to put in the work. There's no quick fix, there's no easy way out of it. Let me pause and allow you to continue the final section of the risk warning. Okay, so down to the bottom here, you would have had the CFTC Rule 4.41. Just allow you to complete that. And then we get over to our practical session. Now, instead of just putting up a strategy on the screen, what I might want to do here is to design a strategy with you. Maybe a basic moving average crossover strategy, and show you how we could use that to enter the market. However, we use more sophisticated, complex strategy that we automate. So let me just put that disclosure. However, you could get the same trigger. I could put a element of money management in it too, so as to guide you. So I want to do that. So I assume you have gone through the risk warning disclosure and you are comfortable knowing that we are here just for educational purposes and not to give you any particular trading advice. Okay, so I want to look at the gold futures. Again, I want to start with a blank chart and maybe just impulsively develop a system that you could utilize. So let me take up a blank chart. You look at the XAU USD, and I am on MetaTrader 4, the platform that we like. I'm going to take off some of the for our strategy. We have 4 main strategies that we use. One is the micro trend strategy. We have our short term, medium and long term. The strategy I'm going to build here though, I wouldn't allow you to take to see a automatic triple screen confirmation. So for our micro trend, which rests on the 30 minutes time frame, and we look up to the 4 hour, so we get confirmation from the 1 hour and the 4 hour chart. But I will show you how we could still do that using the manual system. However, we would have had our the global algorithmic trading system, which consists of 9 subsystems, would be able to trade these market automatic for you. All right, so let me do a thing. I want to use the basic candlestick, and this could give new traders an idea how to change these. So let me bold this a bit. So these are candlestick patterns. We can use the bar chart, we can use the line, or we can use the candlestick. But if you look at the default, everything that's really solid green. So I could change it. I don't like to see also these square boxes. So I'm gonna just right click in it. I'm gonna go to properties. And how do I remove these lines? I go to common, and I say, if you look, what is checked is show grid. I want to uncheck that. And if I go back, you see it blank. I prefer to see my chart like that. If you want the square, you could leave it. Now, let me go and put in some calling in this so that I can know when the market is coming down. I would see a red candle, and when it's going up, I see a green candle. So I'm going to go back, right click anywhere in the chart, go to properties, and I'm going to look at okay, I might want to get an idea the start of each session, so I can say show separator. Okay, so I do that, and you'd have seen these separators. Okay, let me go back, right click, go to properties now. So I'm going to go to color. Okay, I'm going to keep the black background. That's what you see here. A little bit easy on the eyes. Bar up, I want to use my lime green. Bar down though, I want to use red for that. So I select red. The bull candle, that means we expect price to go up. I want to keep it like an up bar, so I want to go with lime green as well. Bear candle down, I'm going to keep that as red. The line, I could change it. So let me put a somewhat of an impulsive color so we could see it. Let's use yellow, the energy point. And then the volume, we could keep it here, arc line and stop line, I could keep that. Now, what happens is this, when I go this, you see, we have the candles set up nicely in different colors, so we could see bullish candles and bearish candles. So bearish candle would have been red, bullish candle would have been green. Okay, so I would have the basic candlestick. I want to use moving average, and maybe I could use the 8-25 strategy, where I put a 8-period EMA, that's exponential moving average, and a 25 exponentially moving average. Some person could also use the 8-21. Okay, there's not much major difference between the 8-21 strategy and the 8-25 strategy. I prefer the 8-25. I believe that the 8-21 is more common. So I want to use the 8-21 with you. But I said before, in our automated trading system, we are able to configure 8-25, 8-50, 8-89, etc. I'm not going to go into that now. I'm going to just focus on those persons who don't know how to build a system and would want an idea how to create a system in order to back test it, to get an idea of what is happening in the market. So I'm going to put my 8 EMA, and I'm going to change this period to 8. I'm going to take the size to maybe the mid, and I'm going to use green for the 8. Okay, and I put it on it, and this what you'll see. I could also use blue. If I want a blue color, I could just right click here, change this color to blue, and that's blue. So sometimes some person might not want the same color of the candle and the line, so they might choose to use different one. I could use the aqua, which I like, so I could use this one, and the magenta. So let's use the aqua. But let's talk a little bit about this 8-21. And note, I am on the 30 minutes. I don't want to be on the 30 minutes. Now I want to let's put it on the 4 hour here. Normally, to get an idea what is happening, I would go to the monthly and see whether or not price that the candle is above the 8. I consider the 8 to for most price action strategies. So above the 8, I would consider it to be bullish in that time frame. Below it, I consider it to be bearish. If you look, when this cross above it, it rallies. Okay, look at this one. There was a downtrend. This candle able to break above it and then go up. Okay, and the 8 work as support until we go sideways. A little bit of a tapping out here. Okay, but I don't want to use one. I want to get a trigger. I don't want to. I want to remove impulsive decision making from the system. So I want to use a crossover. So here I want to put the 21, and maybe I'm able to find a few indicators in my indicator file to make life a little bit easier. So I'm using the magenta 21, so that would be the 821. Okay, so before we move any further, I'm on the monthly, so I can use this to give you an idea. The higher the time frame, the more valid or reliable the signal is. But you must be prepared to take wide swing. So most traders who have small capital would tend not to trade the monthly, because the monthly you need to be able to take wide swing in it, so as to ensure that you have, I consider to be a positive reward to risk ratio. So if you are risking 500 pips or points, then your aim is more than 500, so that gives us more than a 1-to-1 reward risk ratio. But what I use the monthly to do is get an idea whether or not this financial instrument is bullish, and it can use on any financial instrument. So the fact that price is above it and I see the 8 cross over the 21, this means I am bullish on the monthly. I could add some visual aid to this. I could add a 2 EMA crossover indicator. Let me go and see if we can pick up one. We have many of them, and these are pretty much free indicators. So I want to put the 8 here. I put the 21. I might want to use a round indicator, so I want to change this to 3. And maybe just to keep the color code, I could go to color here. I change this to magenta, aqua, and leave this at magenta. And I'm going to go with my full 5 width. And if I want this to show just on the monthly, I would uncheck that and click just monthly. But because I'm using one strategy for all, I keep all time frame and I go bam. Okay, so look what happened here then. So if I go to my extreme left, you'd have seen when the aqua cross below the magenta, we go down, and this arrow would have given you an indication that there is a high probability. There's nothing absolute, there's nothing guaranteed. There's a high probability that our price will decline. The big question, if you look, same thing here. For this, you see a up, aqua, this means that price could advance. If you look here though, yeah, we did advance, but not much. And we start, come back here. There's some question that a person could ask. Should I just execute the trade and leave it? No. The truth is this. Risk management is critical for your survival in this business. The fact that we are not sure, and we can never be sure what could happen, we want to identify a point that we will exit the trade. We don't want to use any mental stop though, which means that you watch it and when it reaches that point you exit it. We want to set it and forget it. Now, for this one, when this was a downtrend, a very common methodology used to set stop is to put it at the highest swing high. The swing high would have been here, so I could put my stop right here. Okay? And then you'd have seen, and then I could determine whether or not I want a 2-to-1 reward risk ratio. That means I went for a 1-to-1. I'm not going to look at that now though. I'm in further videos I will explain that. I'm just looking at the basic entry and basic risk management. Okay. We could also use the factor to identify potential support and resistance, and then we can put it at the tip of the factor if I want to do that. And that was an indicator developed by Bill Williams. I could come and pick that up here. I will just maybe put it at 3 and just have a little light gray. Let's put that gray. And this is what you'll find then. So we don't want it to be subjective. We want it to be, want to use a mechanical way. So when we get this down arrow, then the stop would have been the tip of the factor. Okay, so it gives you a little bit of an allowance. So if price bounce back to retest this high, then what we'd have get is we'd have a little allowance here. So right at the tip of the factor, everybody would have drawn right there. So that would have been where my stop loss would have been. And that is if I'm using the factor as stop. What we can do after a while, even though we don't recommend for you to trade it that aggressively, you could move the stop for any factor that appear above the 21. Okay? So in that sense then, when I start here, and I get a factor here, this would not be a valid factor. I want to get one here, so I'm going to use this one. Okay, so I come right down and I leave it here. So maybe I would be at break even somewhere here, depending on when I get in. Then I get another factor. I just look at the top of the factor. The top of the factor fall outside the 21. I'm okay with that. So this one fall outside it. I trail down here. Here's another one outside it. I want to trail here. Okay. Here's another one, a little bit on top of it, still outside it, nothing subject here. Just put it right there, so we trail it. And this one, bam, we trail it. Okay, all right. So here what happened then. So when price reach here, bounce back, bam, this take us out. Here we get a reversal, and this reversal we could take it, but our stop for the buy now would have been at the low of this factor. If it was there before, or if it was not there before, then it should have been the low of this factor. Assume it was the low of this factor. So we enter here, and price rally and pull back, and we get our stop right here. So we'll assume that this occur after we enter. This would have taken us out. So this would have been a losing trade. So you see, not all trades are winning trades. So this would have entered, say, I want to put this in blue. And this is an approximation, maybe where we'd have entered. Let me put our potential entry line in blue. Okay. What we could do to know where to enter, we could look and see where the crossover occur and put it maybe at the eye of the bar. So if I want to look at that and use that as a guide, then I want to put this in white, but I don't want it to be that big. Okay, so I put this in white to see the vertical intersection. Okay, so I could put my entry at the top of this bar, so I could put it right here, and this is my stop loss. If you look though, we'd have entered, oh yeah, somewhere here, and we rally and pull back on us. This would have stopped us out, so this would have been a losing trade. Okay, let's look what happened. Then we bounce back here. We didn't get up a down arrow. We bounce back and we get another entry here. Will we take it? Yes. Okay, so our potential candle and that entry would have been the high of this. Okay. And our stop loss. So we could take our entry, say here. Our stop loss now would have been at the factor here. And we now ready. So we'll have entered trigger, chipping this one, rally up sideways. We would have possibly received this down factor, so we'd have moved the stop here. This other one, move the stop here. And this is another losing trade, but not at the magnitude of the previous one. Should you be disheartened? No. 2 trade, 5 trade, 10 trade should not determine your future. your position size should be small enough to allow these losses. The idea is this: if you have a system of a positive expectancy, over time the magnitude of your winnings will be greater than the magnitude of your loss. So your net result would have been positive. So we should not be afraid to take trades, and we should not be afraid to have 5 or 6 losing trades. It's a part of the business. We consider these trades that come out at last to be like you're in a traditional brick and mortar business, and every month you get your energy bill, or you get your telephone bill, your utility bill, and you pay it. So we assume the losses as a result of stop loss to be that. Something to comfort our emotion so we don't get too bogged down with a 1 or 3 or 4 losses. Why should we take the trade? Look at this one. So we get stopped out, and this normally happens when we have sideways movement, and we get another reversal here. So we're going to take this trade on the high of this. So we're going to put this on over here, and our stop now would have been here. Okay, so remember we have 2 small losses so far. We enter, rally, chip in, market come, rally on the high. We get a fractal here, so we're going to move the stop loss at the tip of the fractal. Okay, see what I'm here now. At this point, we are still in. Remember now, we will only move it when the fractal tip is below the magenta line. Here's one here, so we get this opportunity to move it. Now, what does that mean here? Our stop is now above our entry point. So we'd have passed break even, for example, when it reached right here. But we didn't move it like a normal stop. We move it based on the fractal below, the tip of the fractal below the magenta. So here we would have been locking in profit represented from here. While our price might be here, this is where we would have been secured. So right in this section, we would have considered SIC to be what we call secured unrealized profit, not yet realized. But we will allow this opportunity for the profit to run, and as soon as we need to cut our losses, we'll cut it short. But we are using a mechanical approach to do this, not by our guts feeling. So price rally on the high here, pull back, we get a fractal here. We move it not to this fractal but to this one. So put it right here. We get another opportunity here, we put it right here. Rally, stall again. Now, at this point, if you look, this was an high, okay, at 2074.87. This another high, 2070.4. Technically at the same level. This is what we would have called a double top, okay? And normally, if a double top, it means that this is a resistance here, where price would normally revert. If you feel and you have other confirmation, which we'll show you, then you could exit the trade and wait for the pullback. That means you want to wait for price to pull back into the 21 or below the 21 and see what happens then. Or the fact that you have secured some profit here, you could allow it and see what happens. We will never know what will actually happen. So bam, this come down, take us out, and that's the end of us. At this moment, we haven't received a upward arrow to say a reversal, so we would have ended that trade. If you look, what I've done is just to give you the 821, and I use the fractal as my potential stop loss. I want to delete these lines, and I want to put delete. Now, I could add additional indicators to the chart to give us more information to act upon. If you look at the top of this factor, I see that this is a resistance area, which means that there's a possibility that market will pull back from this. If you look here, we consider this to be a support area, which means that price would normally bounce from this. But it's not just a single line. It's normally a zone. Sometimes person does use a single line. So if you look, we come pull into it with a little spike and bounce back off. We could add indicators that give us automatically what are the potential, or where you have the potential support and resistance. And what we normally do is to have 3 resistance, 3 support, and a mid-level called a pivot. I normally like to use the Fibonacci pivot, so I'm going to find that and add it to the chart. Let's give you a basic idea how we construct a system. So I add that to the chart. And mark it, I'm still on the monthly. I'm just adding it. We're going to show you where you normally, I'd normally prefer to use the 1 hour, 1 hour, 4 hour daily. So for short term, you'd have used the 1 hour, medium the 4 hour, and long term the daily. But I just put it at the highest time frame here just to show you we construct it. I want to drill down from there. Okay, so let me take back this off too. So if you look right here, I have added the support and resistance indicator. If I go down to my weekly, you'll see it a little bit brighter. And also on this weekly, you'll see the same types of trigger. Look at this one. Here's a crossover. Okay, up, price rallies. You realize that this is clearer. As we rally, you'd have noted that we would have been entering into some resistance here. If you look at this, when this crossed down, we pull back deeper. Same thing here, up, okay? We could go down to our daily. Look at the daily. And this is a powerful time frame that a lot of hedge fund money managers use. But we could look at bottom fishing somewhat. If you look at this, when we pull back here, pull back, and everybody would have been very bearish on the gold. Look when we cross. This is what they call the 821 cross, okay? If you are using the 25, we call it 825. Reason being, we want to ensure that every single trade have a name, okay? Every trade have a name. So what we do here, we could consider this to be what we call the 821 cross. Let me call it 821 bullish cross. Okay, and could put it this to 821 bullish cross. I could expand if I want. Maybe I want to put it in white. Okay. Okay, so we'd have seen 821 bullish cross. We would have set our stop if we are using the factor to be the tip of this, and you follow the same rule. Not the factor, the 21, below the 21, below the 21. Look at this one, widen out nicely here. We're still waiting. Would not put it here. We want to see which one will come here. So I either pull back into the 21, bounce, give me a factor, or I continue to rally until we have some convergence between the 8 and 21. Okay. If you look though at this point, we would have noticed that support 3 is the current support level based on this time frame. You'll also see a factor being placed here. These are resistance areas. That means there's a possibility that price will pull back from here. Note, when price pull back from here, it doesn't really necessarily mean a trend change. Okay, for this strategy, our trend change will either be 821 bullish or 821 bearish. Okay, so let me continue then, and let me go to the 4 hour. And this chart, you could take this when we want to trade in the medium term. So the daily will be long term. For the 4 hour, we go medium, and similar situation you could say here. Okay, look how we move them. Okay, so let me keep it here for the time being. Let me just delete all this. Okay. All right, so I have some idea of support resistance. I don't recommend us to put this on time frame below the 1 hour. If you look, as you go below, it gets more choppier. See that? A little bit choppy, not really moving. Some will move off nicely, but it gets a little bit choppy. I could show you though how we could deal with these choppiness. So when it's choppy like this, we would not use the factor as our stop. We want to use an indicator called the average true range. I could also add 2 more common indicators for you, so as to make the system more robust. One is what I call the MACD. I can use the MACD according to the MetaTrader, or I can add a MACD that I include here, which operate like the standard MACD. Okay, so let me do that. So first I want to put my MACD, and I want to change the original setting. I'm not going to go into the reason why I'm changing it now though. Okay, so I want to put 13. I want to get 21. I'm going to put 8. If you look, the line I'm using is 821. So I want it to mirror the price action on the chart. So I'm using 13 for the fast EMA, 21 for the slow, and 8 for the signal. Okay, I might fix up the colors. For these, maybe I want to go back to use my green and red. Okay, if you look at this, this will give you the original. I'll put a level 0, yeah. So this, I'll put a white for that one. I want you to look at this. When the histogram is above the 0 line, we consider that to be bullish. So yes, we can use this. Histogram above 0 line, bullish. Look at this cross. When we cross here, look what happened to the MACD. It was above the 0 line. Okay? If we go up to the daily, when we cross here, the MACD was also above the 0 line. So many could say then, why use this? Well, the other reason I will show you later on, for example, we could use it for multiple time frame. If you look at this cross, maybe I would doubt it. Because when I look at this cross, the MACD histogram, while we have a acute angle to the upside, the histogram was below the 0 line. So it's still bearish. So I would have possibly ignored this and possibly take this one. This one, when I take it, look at this cross. It was below the 0 line, but also this histogram length is also below the previous. So these two combinations, if you compare them, it means that the bears are getting stronger, so we could move to the downside easier. However, we have other MACDs that we can use, and I want to go ahead and put in it. We have the custom MACD, and for this one now, I want to delete one, but I'll show you. We go 13, 30, 21, 8. In the color, I want to show you how it stays first, and then we change it. Look at this one. If you look at this, you'd find two moving average along with the histogram. This gives me more information, and sometimes I prefer this one. I could also have others that give me a color, but I'm pretty okay with this for now. So look what I have. I want to take this out, okay, and I want to fix this up a bit. I'm going to use the aqua, and I'm going to use my magenta to match that. I'm going to use the same color. Now for this one, maybe I will use let me use blue for that. And I'm going to put a zero line. I'm going to use white and maybe put it as a dotted line and go like this. Okay. And yes, if I want to increase the histogram bars, I could do that. I could put this as with 1. If I want it a little bit bigger, I could go and put it at 2 or 3. Let's leave it at 2. Okay then. If we look at this, you'd have noticed that at the cross of the 821, these lines also already cross. So this gives you a visual aid. This also allows us to do to check for divergence. I'm not going to include that now though in this basic session, but there are many other signals that we can use for this. Okay. Also, as a bonus, I can put in what I call a MACD cross. Maybe some person would say, wow, you're crowding your chart with a lot of indicators. Not necessarily. It all depends. I might want to get some visual aid to see what is happening. So I could go 13, 21, 8. I want to get a different color for the cross. So I'm going to use 2. I want to use red and blue. When I do that, I would see these little dots. These are round circles. They are the indicators that have other type. I could possibly reduce this a bit. Let's put it back to 1. Okay, so bam. Okay, so at least then, if you say a MACD cross without the 821, that's not too much of a reliable signal. Look at this MACD cross along with 821, bam. The MACD 13, 21, 8 will give you pullback and rally. So pullback, rally, pullback, rally, pullback, rally. See that? So if we want to add to position, we could add at this level, this level, this level. Okay, so I want to leave that MACD crossover signal. It allows us to add to position. In other sessions, I will be looking at more complex strategy, or we pyramid the right way. Averaging down is dangerous to your health and wealth. Don't do it. Do not average down. If you enter a trade and it's going against you, wait until the stop loss is hit. Don't assume and add to get it cheaper. It can get even more cheaper and you waste. That means you're throwing money at bad trade. The global algorithmic trading system, though, allows you to combine different systems into one account. So yes, you could find a buy and sell into an account if you're trading account that is outside the United States, where the first in, first out rule is not applied, which doesn't allow you to hedge. It allow you to have independent trade in it. Then we can incorporate like our combo strategy, where the combo strategy, each financial instrument will have 3 trades, one for short term, one for medium, one for long, and we allow that at different risk level because each system will have different risk level. Okay, but let me go and add 2 more indicators. I'm going to add one that I call the RSI, Relative Strength Index. I'm not going to go to the to tell you the meaning for these now, though. Later on, and yes, you could possibly look up and see the meaning. But these are momentum indicators. Okay, I want a 50 level, and I'm going to use a 25, and I'm going to use a 75 level. Okay, I'm going to get the same silver, and my parameters, I'm going to leave it at 14. Okay. Normally, if the RSI is above 50, we consider that to be bullish. That means we expect price to go up, or there is a higher probability that price will increase. So for this one, if you look, this is the RSI, this is the 50 level. Look when it crosses above here. Look at the candle, look what I'm up, okay? Look right there when it crosses below it, down. See that? So the RSI is an indicator that we can add to our chart to give us some confirmation of bullishness. Above 75, we could consider that to be overbought, and below 25, oversold. We're going to talk about those later on. The next one I want to put on is the stochastic indicator. Again, we could discuss some of these. In another session. Now, I want to use a different combination here. I want to use 8. Okay. I want to use 3 for D. I want to use 5 for this line. I want to keep it to high-low. I want to keep it simple. I want a level 50, so I'm going to put down 50 at the level. And just for consistency, I want to use 75 and 25. Use the same silver. And I'm going to change this now. I want a solid green and red. Okay, so I want to keep my lines like that. And this is what you'll find. Now, yes, when these 2 lines are above 50, or sometimes we just use the K, but I normally like to look at both 2. When both of these lines are above the 50, it indicates bullishness. When it's below the 50, it indicates bearishness. See that? Okay, so look at this one. So this BAM, and below 25, these are oversold. Okay? Good. So we have 3 indicators. There's a final one I want to put on. If you look in our previous session, when we use the tip of the factor as a stop loss, I prefer to use a volatility-based stop loss called the average true range, and I'm going to use 14 period. Now, I don't need any other information. I don't need to put any level. I want to fix this up by pulling it down, reducing the space here so I can have more workspace at the top. This system will allow me to execute trades based on the 825 crossover, but to get confirmation from momentum and other oscillators. So if I pull these back, this is what I now have. Okay, I will just look at a confirmation here. So if I'm taking this 825 cross, just for argument's sake, okay, this is what I want to see for buy. I want to see the MACD positive. If you look here too, you'll see it. I want to see the RSI above 50, and I want to see the stochastic above 50. At any point in time, if you look, you'll see them here. This 70.34 reflects the close of the day session, which would have been on this candle. So at the close of the day, you'll have seen 70, and the stochastic you see 83, 81. So these are above 50. The indicator I want to talk to you about is the ATR, and there are different ways to use it. But let me explain how we could use this. We could use this for stop loss, and most time person will say that you use stop loss 2 times the average true range, that 2 ATR. So the ATR you have seen 24.722, 2 times that. We could do some computation here. I'm going to show you my preferred method to do it there, and I will also give an idea of one of the features that we program in the Global Algorithmic Trading System. The tool that we indicate here is what we call the multiples. So persons sometimes use a fraction of the ATR, some use multiple. My preference is to use multiple. But let's say I'm using 2 ATR stop. Where would that stop be? I'll take the price or wherever I'm going to enter. So let's say the current price is 1922. Okay? So for the stop, if it's 2 ATR, I would have 1922. I want to minus 2 times. So it will be 2 times the current ATR, which is 24.7221. So 24.7221. I want to close this bracket, and I will get my answer when I click my equal sign. I'll get 1872.55. So this is what I could do. Let me see if it allows me to copy this. Okay. So it's a basic, nothing difficult. So I just put my mouse right here, double click to capture everything, right clicking it and go copy. Okay. I'm copying it because I want to show you where I would have put that. All I need to do is to take an horizontal line anywhere. Okay. Double click on that, go into the parameter and paste it there. Bam. You'll notice, oops, where did I put that? Let me go again. So I go to parameter, place. Okay, so I just want 0.18. Let's take it out. So it's 1855. I could want out to say the lower, which is 72. And if you look here, you'd have seen where the stop would have been for 2.8 here. And that's why sometimes persons say they trail by the 21. Because normally, take 2 times the 14 period average true range will give you what you consider to be a reasonable stop if the market is trending. Note, if the market is trending. If the market is not trending, you're going to get a lot of chop up. So this is what I normally do. I normally start with what I call a hard stop, an initial stop. Now, my initial stop is always 980. 980, okay? So in this sense, but I'm going to use it as a trailing stop, okay? So I would go 980 as my stop. Let me do something and see if I can clear this and work it out for you. So it's going to be 1922 minus open bracket 9 times the ATR 24.7221 24.7221. I'm going to close my bracket and I will get 1699. So okay, so say 1700. Okay, so I will now go back to my screen. I already have this, but I want to put my other one in red just to give you a guide what the difference would be. So I would have 1700. I just round it up. Okay, so it is really 1699. You know what? Let me put 1699. Okay, so 1699. Now I want to put this in red, just for differentiation and a little bit of a bigger. Okay, good. So this is where my stop is. This should have been my hard stop. The truth is that while this is bullish, and there are times if you enter on this high into this zone, a tug of war zone, then price could pull back, deep correction, bounce. 9 is adequate. If it exceeds 9, and there's no guarantee again, and there's nothing that is perfect, okay? But what the multiplier 9 does is allow me to have at least 3 waves. 3 of the normal waves. So I consider one wave to be 380. That's my conceptual framework that I'm using. I'm not going to go into the whole reason for that now. And 2 would have been 6. So it allowed me to get up to 2 level correction. In the global algorithmic trading system, we wait for level 2 pullback. But the fact that we are trailing this, I mean, if price move by 1 tick in my favor, this will automatically move up as well, because I want to attach that as normal trailing too. In other video I will show you we do that. Okay, so remember this now, that for me, for global traders, we use 980. So if I want to find the stop for the 1 minute, is 980 on the 1 minute time frame. If I want to find the stop on the 5 minutes, I go to 5 minutes and multiply 980. Each time frame have different one. Look at this one. Look at 8.4. The ATR change, see, to 8. If I go to 1, the ATR change to 4. But the multiplier for me will be constant. It will still be 9. So it'll be 9 times 4.46 for the stop. For the 30 minutes, it will be 9 times 2.34. For the 15 minutes, it will be 9 times 1.2557. For the 5 minutes, it is 9 times 0.5436. And for the 1 minute, it is 9 times 0.2793. Therefore, each strategy and this 821 can work on any time frame. So I designed that multiplier 9 based on a lot of research, and this research will give me an approximation. What is the multiplier that would have taken me out of market action? What is the multiplier that would allow the market to move aggressively, and even with brokers hunting stop? And the reason for me to use the 9 as well is to avoid the brokers that hunt stop, spike, take you out and move back in your favor. Okay, all right. So I clean up the chart somewhat because I want to show you how you could save it. And if you want these to go down a little bit more, you could take them down too. Okay, just pull it down. Score. Just left click on your mouse, go to it, left click on the mouse and pull. Oh, you see, we could still see the reading here. All right. Okay, so technically then, this would have allowed us to trade. The only thing I have left to discuss with you is position sizing. I don't want to do it in this video because it might be a little bit too complicated. But what we have now is a strategy that can be applied to the various markets. I want to use the daily now and look at gold. We have seen gold rally off the previous low. The distance between the 821 is getting wider and wider. So I believe as the economic data coming out of the US becomes softer and softer, then the Fed will have reason to ease or to reduce the magnitude of the interest rate hike. Now I want to discuss a little bit of a fundamental with you because a lot of traders get confused. In the early days in an inflationary environment, then gold is normally used as an inflation hedge. We have seen though over the last few months when the central bank get very hawkish, that go and inflation running high, that gold also decline. What's the reason? Okay. The truth is that holding gold does not give you a return in terms of a return tied to interest rate. But when central bankers start to increase interest rate, then the person who have the capital in the bank will get a reward in terms of X% per annum. So while you hold your funds in the bank, it is earning interest. But if you hold gold, it will not earn any interest. So we always say that money goes where they are treated better. So the money in the bank will be treated better, as bankers would be forced to increase the interest rate on deposit if they want to remain competitive. And that's what has been happening over the last few months. Now, if central bankers decide to pivot, to pause, then we could say that there's a possibility where the economies will slow so much that they will start to cut interest rate. So here is now a expectation gap in the sense that if we start to reduce interest rate, then the potential reward that you'll get by holding deposit at bank would have reduced. And maybe that still doesn't hedge against inflation. So that's one of the reasons. There are many reasons, but that's one of the reasons why we see gold rally. However, from our perspective as a technical trader, we believe in the efficient market hypothesis. We believe that all information that is available would have been reflected in price already, or soon reflect in price. Hence, I can use my chart and make my decision and ignore all fundamentals, because all fundamental will be reflected in the chart if it's have not yet been reflected. And with this technological age, we believe that the market is getting more efficient in the sense that the information have many mediums to transmit much faster, so it can be reflected in price. Later on, we could discuss more fundamentals on this channel. Okay, so that's goal. I'm going to show you how we could save this then. Yeah, or we could save this as a template. So I could right click anywhere, yeah, go save. I want to save this as the 821 advance. Okay, save that 821 advance. While we wait for that, so you could probably save it by any name what you want to save it by, but I want to go 821 advance. I call it advance. I want to put the here 2023. I call it advance because the truth is that it is more than just the 821. You'd have seen that we have our momentum indicator and oscillators. Later on, we could show you how you improve on these buy levels instead of buying high. We could wait for the pullback. But I'm going to show you that later on in other videos. That's not to get too much uptight with this one. All right, so what I'm going to do then, let me see if I can use another instrument. Let me attach this to the Euro USD. And I'm on the daily. For me, all you need to do is to hold down the Euro USD and pull it on the chart, and it will overwrite the goal, and you'll see the same strategy printed on the Euro USD. Now, I want to just go to my preferred time frame is a 4 hour. I like to stay right here and look into what I'm doing. So I like to execute on the 4 hour, or if I'm on the 4 hour, I could possibly wait for a pullback and then I could go to the 1 hour, but I want to see what the 4 hour doing. And let me go back a little bit to my right, to my left. If you look at this 821 cross, as we were explaining earlier on, so it's a different instrument, but nothing changed. And this 821 cross, I realize the MACD is positive, RSI above 50, the stochastic above 50. All I need to do then is to go with a buy. I could buy maybe 2 pips above this bar if I want to buy, because I wanted this bar to finish, to close before we enter. And then my stop would have been 9 times the ATR. So the ATR at this point was 0.0043, that's 43 pips. I also have another indicator that I can add to the template to make my stop easy. Yes, I can go to an indicator that gives me the ATR in pips. I should be able to find it. Let's give me a sec. So ATR in pips is no other ATR in pips indicator. I am using period 14, so I change that to 14. And I want to multiply to be 9. Okay? I might want to take this down a little bit since I have the resistance and support indicator here. So maybe I put this at 30, meaning that the y-axis coming down here. So I put this at about 40. So I can see it pretty easy outside of the. Okay, still crowded in that. So I'm going to go back again and maybe put it down a little bit more. Okay, so let me use them. Let me use 6 there. Okay. Yeah, this is good, but we could take it down. I want it to see clear, so I'm going to use 75. I mean, just put it down so we can see things good. Okay, good. So if you look, it's going to give me 9 times whatever the ATR is. 319, pretty close to this. Look at this one, 35, 9 times 35, okay? So okay, sometimes you have a little bit of a difference, but not much. So 319 pips if I am on the 4 hour, okay? And if you look where we are, that would have taken me down to about 105 something. So we are way outside of any issue here. Matter of fact, this 105 is be somewhere below here, okay? I want to resave this so as to reflect the ATR in pips indicator. So I just need to find back my original template and override it. And this does show you how you can sit and look at various indicators and create a strategy, back test it, and put it in your arsenal. So if you look, life get a little bit easy for me now. If I want to go to my daily for the Euro USD, I go to the daily, I see that this is bullish. If I enter, I can see what the amount of pips. You will notice as you move up in the time frame, the stop loss is wider. So if your account size is not at the level to maintain this swing, you must use a lower time frame. Okay? We'll show you various strategies. I guess therefore I like the 4 hour, like to use the 4 hour here, as it gives me more reliable signal. Alright, so this is going to lead me to the end of this session. Maybe before I close, I could look at a very, very common financial instrument that a lot of persons would talk about. But maybe I could look at WTI. Let me look at high first. Let's just show you that it can work and all. So here we see another cross, 821 up, and you see trend nicely up here, hitting into resistance zone, pulling back, or 821 down. Okay, not all trade going to work out, so that's why we use our stop loss to in case we go around. I'm going to look at Bitcoin because a lot of persons have been wondering, where will Bitcoin pull back? Wow. I want to talk to you about this. Look at this one. We were in the down trend. 821 cross up to the upside. Market really consolidate. We're able to go 9 times the ATR. 9 times 100.99. Technically 900. Look what happened on this breakout. Wow. Look here. Look at this one. Nicely trending here. If we're using the stop according to the factor that I indicated to you, when we enter here, stop below here, factor, stop, 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 stop. Look at this one. We'll ignore this one. This one. We've seen the trade. Look at this powerful bar here. 4 hour powerful bar on the last day of trading. We say it works. If you have the patience, the guts to work it, it will work for you. Maybe I want to look at, let me look at a stock. Let me look at Google. Just show you that it works and all. Look at Google. It was a downtrend for a few weeks. 821 crossed to the upside. We take it, gap up this morning, up 97. This leads me to the end of this educational video. It's a little bit much longer than expected, but I'd like to give you things of value. Before I end the video though, there's one other indicator I want to talk a little bit about, is the Fibonacci pivot indicator. If you look at this blue line here, this is like the equilibrium line, the balance point. If price is above the pivot, we say the market sentiment is bullish. And if it's below the pivot, we say it is bearish. And we use these support levels as target. So if we short below the pivot, these are the support levels that we're going to target. If we buy above the pivot, the resistance would have been later on we could look deeper into various strategies that trade them. This leads us finally then to the end of this video tutorial. I hope it was informative, and I also hope that you learned from it, especially those persons who have never yet traded the market. I want to encourage you to subscribe to this channel. We're here to help you, to give you information so that it can help you to make more informed decisions. We're not here to give you investment advice, but to give you an idea, a little bit of a peep in our daily activity, for you to see, is this a career path that I might like? We at Global Accountancy Institute and Global Financial Engineering love the financial market. That's our daily home. Until my next session, happy trading.